You never know what kind of the market will present to you. Your ultimate goal should be to find the opportunity where the risk and reward ratio is best. The perfect example for the quote is what happened on the Indian stock market on Friday. If you watch the market, Nifty alone lost 500 points, Sensex lost 1,800 points. Due to the new variant of coronavirus arises in the Western country that significantly impacted in the Indian stock market. It doesn't matter whatever the market condition would be. If you have a sufficient knowledge about the option trading, you can make a money in the option world. In this video, we are going to see how Nifty is going to perform on the next four trading session. First, we will go and find the strong and support zone of the Nifty. Then we will go on the find the what is the volatility range for the Nifty for next four trading session. If you don't have a basic knowledge about the volatility, don't worry. I made a separate video about that. I shared the link in the description. Please do watch the video. You will have a basic knowledge about the historical volatility. Once we're done with that, we'll go and find what kind of the option strategy we can opt for it. In the option world, we have a number of option strategy available. So at what strategy we will go and pick and what are the thought process behind the strategy we will discuss. Once we're done with that, we'll go and conclude the session by knowing at what strike price I build the strategy and what is our profit and loss ratio. In next 10 minutes, I'm going to present all the information to you. Please do watch the entire video. If you're just new to the channel, please watch all my videos and leave your comment in the comment section. And don't forget to subscribe my channel. And if you like the video, please click the thumbs up button. So we don't want to waste time further. Let's begin the session. First, we'll go and find the strongest support and resistance zones of the Nifty. The last close of the Nifty is 17,023. The nearest support zone is 16,800 followed by 16,500. So these are the level where put option sellers strongly believe market will not breach further. The nearest resistance zone is 17,300 followed by 17,500. These are the level call option sellers strongly believe further the price will not penetrate these levels. So let us go and find what is the volatility range of the Nifty. So these are the historical volatility levels. So as I said before, if you don't have a sufficient knowledge about the volatility, I made a separate video about that. I shared the link in the description. Please do watch the video so that you will have a basic knowledge about the volatility and thought process behind that. So these are the levels. I gave a number, R1, R2 and S1, S2. So this is not a typical support and resistance level. So this is a standard deviation level. I just named it R1, R2 in order to understand easier. So what is these levels? So what are these levels? What it meant? How we can go and understand this level? Let me explain this very quickly. So when I say R1 and S1, which means so this is a 68%. I can confidently tell Nifty will trade between these level from 16,772 to 17,431. So this is a standard deviation one. The remaining very few chances, 32% chances, Nifty might trade outside of the range, either upside or downside. So if we go and take this level R2 and S2, this is a standard deviation 2, where I can tell you 95% confident Nifty will trade between those ranges. So between 16,448 to 17,782. So very low 5% of chances available where Nifty might trade outside of these ranges. So the daily volatility of the Nifty for next four trading session would be 1.95 percentage. And moreover, if you look at the graph very closely, you can see the standard deviation is moved away from the mean value of the Nifty. So in last session, if you will go and watch the candlestick chart pattern, we will find very long bearish candle, which means we had a very big movement on the Friday. So what we can expect, so we will not have a much stronger movement on Monday session. Most probably that's going to be a flat session. So let wait and see how Nifty is going to perform on Monday and followed by other trading session before it get expired on December 2nd. So these are the volatility levels of the Nifty. So next we will go and find what kind of the option strategy we can opt for this kind of the market situation. So I have chosen bear put spread option strategy. So what is this strategy? What is the thought process behind that? When we use a bear put spread option strategy, so our market view should be moderate bearish. So maybe a long bearish, but I'm just confined with the next four trading sessions. So I'm expecting Nifty will be a moderate bearish. So since we found a very strong support region around 16,500, so we have a 500 points left out to reach this strong support zone. So I'm expecting market will be a moderate bearish. So if market works our favor, we will go and earn fixed profit. And if it goes against our prediction, our loss will be limited. So that is the reason I repeatedly strongly recommend you to all please go with the option strategy instead of naked call. So if you go with the naked call, you will have a only 1% of one side of the probability to winning in the trade. If you go with the option strategy, you can go and minimize your loss. So let us go and see how it's going to happen. So actually, this is a two-leg option strategy. Say, as I said before, this is a put spread. So I initiate the long put in the money, and one long put in out of the money. So if you go and change the strike price according to that, your risk and reward ratio will change. So let's go and find at what strike price I have chosen and build the option strategy. As I said before, this is a two-leg strategy. One quantity for long put, one quantity for short put. So one is, as I said before, in the money, since the market is 17,026. So I opt for the strategy. I opt for the strike price 17,100, which is in the money. The premium which we have to pay 214 rupees per unit. So the target day would be 4. The implied volatility range would be 19.4% and Vega is 6.9%, which means which means every 1% of the implied volatility increase, the option premium will increase 6 rupees 95 paise on the premium. So that implies the Vega option. So for short put, we have opted for the OTM 16,600 and we will receive a premium of 58 rupees. Again, the 4 days target, the implied volatility of this strike price is 22.67 percentage. So every day, if we loses every volatility, it increases. We will lose minus 3 rupees 77 paise on the premium. So by building this option strategy, so our net debit would be 156 rupees on premium. So which come to the maximum loss of 7,800 rupees. This is our maximum loss when we when our strategy works against our prediction. So our maximum profit would be 344 rupees on the premium, which is 17,200 rupees. So if market reaches 16,600, we will have a nice profit. So what is the break even points? When market reaches 16,944, we will start booking the profit. So this is a break even point. in this strategy. The implied volatility level 19.6, which is 71 times lesser than the current volatility in the last 252 trading session. It clearly tells this 19.4% is 39 times greater than the historical implied volatility, which we calculated in last 252 trading session. So when implied volatility high, so the premium will cool off soon. So before that, we will go and start booking the profit. So as my prediction, so Nifty will be a moderate bearish. If market reaches 16,600, we will book the maximum profit of 17,200. If it works against our prediction, the maximum loss would be 7,800 rupees. I hope you enjoy the video very well. So I'm sure you would have a good knowledge about the concept I discussed here. If you do have any doubts about the video, don't hesitate. Please leave your comment in the comment section. I'm glad to clear all your doubts. So we come to the final part of the session. So before I go and end this video, please subscribe to my channels and leave your comment about my video in the comment section. So we'll go on come again. We'll discuss about the different stock in the different occasion. Till then, bye from Shiva Gurunathan. Please stay with me. Thank you.